I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have Kyn, the CEO of Minterest. Kyn, welcome to the show. It is a pleasure to have Minterest back on.
Thank you very much. I'm really excited to be here with you. I know we've been talking for so many months and been waiting for this moment to happen, so finally we're here.
You're very welcome. Excited to dive into the depths of DeFi and how can we make an efficient system that maximizes the value creation for the users of DeFi with also making it distributed, decentralized, and through the principles of DeFi. I would love for you to kick off our conversation with just sort of a high level of what is Minterest as a DeFi platform and what makes it so great, and then we'll dive into all of the details.
Sounds good, Ashton. So Minterest is a DeFi lending protocol with a number of, killer innovations under the hood. But whenever you think about DeFi, lending protocols are a core form of decentralized banking infrastructure. That's how I kind of think about it. In the real world, many of us have savings accounts or checking accounts where we're depositing our fiat, and we're earning an abysmal amount, but we're earning some kind of an interest rate. The bank typically takes your deposit, it will then load it out to somebody else, earn interest on that, and give you a portion of it, right, as a depositor. That's what we're typically accustomed to in the real world. So lending protocols in DeFi and blockchain basically act like that. So it allows for a user to deposit their crypto assets and earn yield. Because typically right now what's happening is 85% of crypto holders are acting like they're basically putting their money under a mattress. It's like they're not putting their money to work effectively, right? So what we're trying to do is provide an environment where you can safely deposit your assets. And on the other end, there are people who want to borrow it as well. So it makes for a very effective and efficient financial economy in DeFi on blockchain. That's a general idea. But when it comes to lending protocols like Minterest, they operate as being over collateralized. And what that basically means is that if someone wants to borrow, say, $100, they need to first put up maybe about $150 of collateral equivalent. So this way, what happens is that the assets are protected and it's all transparent on the blockchain. There are no shenanigans that can happen behind the scenes. Everything is there. Everything is written in code. And that's what makes it much safer, generally speaking, in terms of the way in which you actually deposit your assets. You know exactly what's happening behind the hood at any time. And with Minterest, we've been building it for the last 3 years. We've spent a lot of time on it. It's been operating in a private launch environment on mainnet Ethereum for the last 6 months. We just keep putting it through its paces. Security is really important for us as well. So we have gone through 7 security audits as of 2 weeks ago, basically, with some of the best in the space here. Trail of Bits, Peck Shield, Hacken, and Zokyo. And we're also, in addition to that, just for additional security, we are partnering with Cube3 for active smart contract monitoring. So, the idea is that even in a live environment, you can test it out and make sure that, things are secure. We can monitor that. So that's DeFi lending and Minterest in a nutshell.
Very great analogy there of the bank lending, and I've seen the rates, and at least when I logged into my bank, and it's not very good. So everyone's especially in crypto, they're looking for alternatives. But you're right that there are a lot of people that are sort of not doing anything with the capital that they have in crypto. It's just sitting there, especially if it's in stable coins, and they're not earning any potential interest that they could be with DeFi platforms. And DeFi is very early on in its adoption phase compared to traditional banking and the lending that they do. And in summer of 2020 was sort of when it all kicked off in the DeFi summer. And these mechanisms that came out were allowing people to get quite a good yield for their stable coins or for their other kind of assets that they're depositing and lending as well. And although there have been quite a few iterations since then, although we're still only a few years in, I feel like there's a lot of work to go, and there's more advancements that have been made in more recent times here in the last year or since layer 2s and different expansions and ways to make it more efficient. Maybe you can talk a little bit about Minterest and how it builds on sort of the original vision of DeFi and how you're actually looking to maximize the yield and the efficiency in the modern day times of DeFi.
Good question. So again, if we go back to the whole banking analogy, as you were saying, you're not really earning very good yields, right? Because what ends up happening is the bank effectively is extracting the difference between what they're paying out to the borrowers and what you're getting as a depositor, right? There's a big chunk there that's missing, and it's going to the owners of the bank, shareholders, and the like, right? And this is actually there's a similar problem with that in DeFi lending where if you look at the last 2 years, hundreds of millions of dollars of fees have been generated by the largest DeFi lending protocols in the space, your Aves and your Compounds and the like. But those fees are not going back to the users. They're going to third parties or to owners, or stakeholders, basically. And so what Minterest is doing is it has designed it so that all of these fees actually do go back to the users of the protocol. So it's actually capturing a significant number of fees and sending it right back. So basically, it means that if you're a user, you're also essentially an owner. You are getting the benefits of what the protocol actually does. And we think that that's much fairer finance across the board.
Mm-hmm. No, that's a great point, and sort of ironic that they would create a decentralized finance platform, and you're supposed to be cutting out the middlemen with these smart contracts and making it more decentralized. But in reality, it's still, maybe it's just because it's early on, but it's still not as efficient as it could be and as decentralized as it could be. Now, I know you were mentioning that your team's been working on the application and it's not in the full public beta yet. Working on, obviously, security is of utmost importance when you're depositing millions or billions of dollars into a protocol. Could you give me an example of when the public launch happens, if I was a new user to DeFi and I'm not really familiar with how exactly Aave and Compound and all of these intricate systems work, and I had some Bitcoin or some stable coin, what would I do if I went to Minterest and I was like, okay, take my capital and I'm going to earn a specific amount? Do I have to do anything?
It's actually very simple. If you've ever used something like Uniswap or any of these other dexes, right, and you're trying to provide liquidity, it's actually more complicated to do it there than to make a deposit on Minterest. On Minterest, you come to the website, come to the application, you log in with your MetaMask or whatever wallet that you're typically using from your browser, and then what you'll notice is you'll say, if you're having USDT, you'll see, hey, deposit your USDT. You just hit a button to hit the supply. You hit supply to basically saying is that prompts you and asks you how much of your USDT do you want to supply. You put the number in. You then hit basically one button to say I'm depositing, one more button which will require you just to make approvals, basic approvals that we can actually access your wallet, right? And then it'll make a deposit. And from there, you're earning interest block by block. You're not locked in. You can always withdraw at any time that you want to. And that's effectively how it works.
Mm-hmm. Wow, that's very cool. And with that interest, is there some secret of maximizing the efficiency or maximizing the reward? Is it the difference in the spreads, or the fact that the smart contract is more efficient and that you're able to offer higher rewards or maximize those fees?
It's a good question. So essentially, in terms of the basic interest rate, it's supply and demand. So it depends on how much of what you're depositing someone else wants to borrow. If other borrowers want to borrow a significant portion of what you're supplying, they're going to pay you a higher interest rate. That's the simple method of the interest, which is really no different than any other lending protocol out there. However, when it comes to maximizing yield, the way that it works on Minterest is you are also earning, in addition to basic interest, like if you're depositing USDT, you're earning interest in USDT. But you're also earning an additional reward, and that is with Minterest's own token, which is called MINTY. And so you're also earning this MINTY token. Now, all lending protocols typically have some kind of a reward token. It's a way to incentivize users to come on board in the first place. But when it comes to the MINTY token, it does one more thing. And that is that you can actually have it so the MINTY token will be automatically staked in our governance process. Now, why this is important is not only does it allow you to vote on proposals, but the fee distribution I was talking about, where Minterest is able to capture more fees and it distributes it back to users of the protocol, right? the way it decides who gets those fees is based off of your stake. So whatever proportion of the total number of Minty tokens that you stake in the governance process, right, you will get a proportion of that fee distribution. That's the basic idea. So as a result of that, if you're just lending on Minterest, you're just applying, you're just depositing your assets onto Minterest, and you're automatically staking those tokens, you're earning a portion of that fee distribution automatically.
Wow, that's really great to hear, because so you're getting, if say you were risk averse and you were just looking to lend out stable coins, you'd be earning stable coins as the reward. You wouldn't have to worry about the volatility of any cryptos. Plus you're earning the Minty token, plus if you're staking in the ecosystem, then the actual mechanism of the DeFi part itself is rewarding you for contributing to the system.
That's exactly correct. That's exactly right. So you're earning, and there are a number of ways in which you're earning rewards. And this way, the underlying economic engine of Minterest, you're benefiting directly from it. Whatever fees it's generating, you're getting it right back to you. And I think that's the way it should be. That's the fair finance portion of it, basically.
That's very cool. And if you had Minty tokens and there's different governance proposals, what are the active contributions that you can make to actually shaping the platform? Is it just different updates or expansions to different networks? And what are kinds of things that people could do to actually maybe increase their allocation and make it even more efficient for themselves?
Yeah, it's a good question. So in terms of Minterest's DAO, that is a structure we're actually putting together. And one of the first proposals that we're looking to do is have our existing user base shape the structure of how DAO proposals should be and how voting should be. So that's kind of the first piece of it. But in terms of what you'll be able to do, really, I mean, it'll be everything from being able to make key decisions on how much of the interest rate spread is captured by the protocol and then distributed back to users, more or less, all the way up to larger things like which other chains do we want to support, right? So it can be it's a pretty broad area of decision making. Obviously, at the very beginning, the core Minterest team will make more decisions, but as time moves on, the intention is to make it far more decentralized, so larger and larger decisions, more important decisions, can be made by the Minty token holders.
No, I think that's a great path forward. And it's hard if you release a protocol with sort of no vision at the beginning, just to a DAO and try to get thousands of people to agree on the same thing of where we should go. It sounds like you guys have built a great foundation of where this is heading, and then being able to gradually let the Minty holder sort of take over. I feel like that's more of the true nature of decentralization.
Otherwise, it becomes a bit chaotic, right? Because I mean, if there's no structure in place, then it's just people basically shouting at each other, saying, "I want to do this, I want to do that," and then how do you make a decision out of that? So yeah, you're right. That's the intention. That's the idea.
And with decentralized finance, working on the smart contract side, depending on what blockchain you're using, there's a lot of DeFi on Ethereum. I know you guys have launched the private and the testing on Ethereum. I know that sometimes Ethereum network costs a little bit more, not too much, but a few dollars compared to some other networks that maybe can cost cents, or there's a lot of advancements that have happened in the last year that I feel like the people in DeFi summer of 2020, when DeFi was first created, they didn't have the advantage of having these networks that were as efficient. I feel like this is a huge move for DeFi. Is there any plans for Minterest in increasing the efficiency with different blockchains or newer technologies?
Great question. And the answer is yes. So you're absolutely correct. What's happening right now in this space, as opposed to a few years ago, right now we're seeing the launch of so many different new and very interesting layer 1 and layer 2s. I mean, every single week we're hearing announcements, right? So there's so many new blockchains being launched. And when we look at this space, when we look at liquidity, like the overall liquidity in DeFi or across all the blockchains, about 55% or so is sitting on Ethereum, right? And then the rest of it, 45% or so, is sitting across 100 different blockchains. 10 or so capture maybe about 85% of that liquidity. That's like $20 billion basically right now that is fragmented across multiple chains. And if we look at 2021, the peak of 2021, right, that value of 20 billion would actually be 100 billion. So like there's a tremendous amount of growth potential over the next couple of years, even if we just look at 2021 numbers. So what we're seeing is that this fragmentation of liquidity requires some way of combining it back together again. Like, how do you get access to it? So what Minterest is looking to do, it has basically a 3-stage multi-chain deployment strategy. So the whole point is, at the end of the day, doesn't matter what chain you're on, you should be able to lend on Minterest, deposit your assets on Minterest, and be able to borrow. And it doesn't matter what chains you're on, lend on one, borrow on another one. That's the direction we're moving in. So right now, yeah, Ethereum is our initial core hub. We are looking to deploy what we're calling mirrored versions of Minterest. Basically, we're taking Minterest and we're saying copy paste somewhere else, but it's not just a copy paste. What we're actually doing is we're connecting the two versions of Minterest together on two different chains using the same governance token. And so you can vote, doesn't matter where you are, you can vote, you can participate in the fee distribution. But the eventual idea is that as we're deploying different versions of Minterest across different chains, eventually you'll be able to talk to each other directly, so you can lend on one and borrow another one. And that way, we're looking to unify that liquidity across the board, especially as we move into the next cycle, where we definitely see we're going to have a number of very interesting chains, and users will be a little bit confused in terms of where to go, how to operate, and we want to be a solution for that.
That's really great to hear, Kyn, because all of these different blockchains, there's a little bit of fragmentation, as you said, spread out, but also the process of trying to move funds, say some newer blockchains, they're more efficient, and then there's a bit of a higher yield. But the old ways, there's a bit of a process to like get your funds over there, and nobody wants to spend the intricacies of trying to bridge assets and all of this stuff. You need to make a DeFi platform that is just straight cross-chain compatible. That doesn't matter what blockchain. You can sort of unify that liquidity, which will also help with the efficiency of the markets, to being able to deposit or lend on any chain.
I fully agree. And you were right also, by the way, about the gas issues, like on Ethereum, right? So for Minterest, we have a really passionate community, over 4,000, at this point, over 4,000 token holders. Most of them are actually retail. And the challenge for them is on the Ethereum mainnet launch of Minterest, it's very hard for them to be able to deposit assets or to borrow or to participate on that side, because gas fees can be $50 to $100 for a single action, right? And as the congestion continues to increase, as the price of Ethereum goes up, the ETH token goes up, it just becomes insurmountable for them to be able to participate. And that's the other reason why it is also imperative that we look at solutions that are on other layer ones and layer twos, so that our community and so many others can participate on that. It's very important.
That's a great point, especially if we're going to make it truly decentralized, so that retail and people that have, hey, I want to lend $20 and earn a little bit of interest, but the fee is more than that, then that just sort of cuts out any small people. So I'm looking forward to seeing how that cross-chain compatibility part fits into Minterest. I'll be watching to follow along. I know that there's, throughout this year, I think it was the year of layer 2 chains that were efficient and fast being accepted by retail and understanding, hey, these can all tie in together and it's fractions of a penny for a transaction. So I'm looking forward to that. And I was looking through the snapshot of what's to come with Minterest, and I saw that there's also sort of like NFT incorporation into it, which is sort of cool. Maybe you could just touch on that briefly, on how NFTs fit into DeFi and like how people can benefit from that mix of NFTs and DeFi together.
Sure, absolutely. We all internally at Minterest, we love our NFTs. So Minterest does have an NFT play, but these are not just pretty to look at NFTs. The way we've done it is we have the collection essentially is 100 of the most influential in blockchain. And what's interesting about the collection is that we created it back in 2021. So which includes descriptions and names and everything, right? And what's very interesting about it is how things have shifted the last 2 years, basically, especially for a number of these individuals. But we're not going to change anything on that front. So it'll be a part of history. But anyway, moving forward. So the idea is that what these NFTs do, beyond looking pretty, is that they're actually functional in nature within the Minterest protocol. So if you are holding on to any of these NFTs and you're either lending or borrowing, it actually provides you with a yield boost. So that basically means that, let's say, for example, you're lending and you're earning 5 of our MINTY tokens, but you're holding on to one of our absolute rarest NFT, which is a Satoshi NFT. You'll earn not 5, you'll earn 50% more. So say 7.5 tokens instead of on that given day. That's the idea. The purpose behind it is it's in order to have it so that our liquidity providers, our users, they're incentivized to come and stay, right? So that they're not just basically looking and leaving. They have an asset that they have, which is the NFTs. They're providing liquidity, so they're more committed in that way. But even beyond that, I think the idea is that these NFTs in nature, they're also great tools in terms of generating more awareness for Minterest, because again, as you were talking about, we're not looking just to be on Ethereum. We want to go to other L1s and L2s, which are much more retail friendly. And what that basically means is that these NFTs, which really play very well to retail, it's a great way for them to learn more about what DeFi is, what Minterest is, just through having access to, be able to see these NFTs through other types of partnerships that we do, other marketplaces that we deploy it onto. And by the way, we haven't sold a single NFT. We give them away, basically, right? So there's nothing about us selling them. It's really a tool for us to be able to give value to our users, and at the same time for them to learn more about what we're doing. So I think it plays really well in the traditional whale market, but really tapping into retail as well, because we really do see Minterest as being available to everybody, not just to one segment of users.
Very cool. I'm going to check those out after. I saw a glimpse of it, and yeah, I can imagine 2021, some of the influential people, maybe they were on the cover of Forbes, may not be on Forbes anymore. A lot has happened since then. And a lot in DeFi has also happened in terms of the TVL, and you were talking about that a few minutes back, about how it was very high, and of course there was quite a bit of speculation back then in 2021. But I feel like the fundamentals of DeFi since 2021 to now, almost moving into 2024, not just the cross-chain and adding in more layer 2s, just the efficiency overall of DeFi is stronger than ever, but the total value locked is not necessarily back to those all-time highs. I'm curious about your insights and your optimism for the future of DeFi. What is the sentiment right now? Are everyone is eager to jump into platforms like Minterest, or do you think there will be other catalysts where DeFi will start kicking up towards next year in the Bitcoin halving?
Your question. So when it comes to DeFi in general, right? Again, this is it. I see it as even though it's not a technology infrastructure, as most people might think, like blockchains, but it actually is an economic infrastructure. So if you believe that blockchain will continue, then DeFi banking, so to speak, right? Lending protocols like Minterest are going to be there no matter what. What's very interesting is we have been actually talking to a number of these layer 1s and layer 2s that we were talking about, right, earlier, because there's so many launching. We've been speaking to a number of them. And aside from maybe a couple, they're all looking to be general purpose blockchains. And what that means is, in order for them to accrue value, they need lending protocols, they need dexes, they need bridges, they need oracles, right? Like your chain links, right? They need all of that infrastructure. And they're looking for blue chip protocols, or they're looking for projects that are already built, have been tried and tested, that teams have been doxed, right? Like they want to make sure it's safe and secure. And so every one of these chains is looking for a quality lending protocol to be deployed onto those chains. So there is definite demand from all of the chains for a lending protocol. Now, coming back to the use of it, certainly, if you believe that blockchain is going to continue, if you believe that it'll be a financial hub, then lending is going to be one of those core pieces that will continue to build. Now, you'll have to keep innovating, but it's going to be there. Right. And in terms of use of lending protocols, at least what we've been seeing over the last 1 year from liquidity, I mean, it bottomed out basically end of 2022, early 2023, and it's slowly moving its way back up. Now, one thing to keep in mind is that I remember at the end of 2019 that when we looked at DeFi, when we looked at lending, right, the market had reached 1 billion, like the whole market reached 1 billion, right? Now, at like the bottoming out of this last cycle, we were talking about 40 billion, right? So it's like, it's definitely moved from 1 to 40 in like 3 years, 4 years, right, at this point. So I don't think it's going anywhere. I think it's only going to grow. So the whole point is right now, for anyone who's building that believes in this space, it's about how can we position ourselves so that we are able to capture as much value as we can for our users when we move into the next cycle, which we all believe is going to be coming. We're seeing plenty of regulatory clarity, whether you like it or not, but it's coming, right? You're seeing whether it's the talk of ETFs, whether about governments that are trying to adopt or are pro crypto, right? Like the Argentina president recently, who's very pro Bitcoin. So it's moving, and so yes, a long answer to your question, but it's here to stay. It's here to grow. That's our view.
No, that's a great perspective, Kyn, and yeah, I can imagine 40 billion. When you look at it in terms of the stock market and derivatives and lending, it's nothing. I could easily sort of see that being 500 billion or hopefully 1 trillion, which is sort of the total market cap of cryptocurrency right now, which is even still small. So yeah, I agree with your optimism, and I like that perspective of what you're saying. The bottoming of it, we're 40 times bigger, and I feel like if what you're saying is true about the layer 2 platforms and blockchains need this technology, and that there's a demand from the retail users, and it sounds like the perfect concoction moving forward. Now, I want to talk about the future for Minterest. I know your team's been working on this for many years, and you mentioned all the security audits, making sure that everything obviously is safe and secure and proper and efficient to maximize the returns for people and make an efficient system for lending before it goes out to the general public. Is there any timeframes for that, or is there any way that people can get involved right now, today, to learn more about it or get involved in other ways?
Yeah, sure, absolutely. So right now, I mean, we are allowing some select users to come on board and test drive it, basically. If you have a Minterest NFT, and you can do that, there are ways to get them. And certainly if you come to our community, we'll guide you along the way in terms of how to get one of those if you want to try it out. What we're going to be doing is in February or so, end of January, February, we'll be actually launching into what we're calling private access. What that basically means is that users will be able to come on board. We'll be jacking up the incentives, the rewards, basically testing it out kind of before we go into a true public open launch phase. So it'll be pretty exciting. There'll be quite a bit of activity that we can see happening at that point in time. So I think that's a very good moment to look forward to. Moving into the end of Q1, we'll be going into a public launch. So that'll be really good. But certainly come into our community. I think our Twitter is at Minterest, Minterest.com for the website, right? And you'll find all of our links there. And that's probably the best way to learn a little bit more about how to get access to Minterest and how to participate in that.
Amazing, Kyn. I'm looking forward to those stages for Minterest, and hopefully that coincides with an ETF approval for Bitcoin and the halving and everything going crazy, and wide success for Minterest as well. I'm hoping that works for you and your team. I will leave those links that you mentioned in the show notes below. Appreciate your insights into how DeFi works exactly and where the industry is going. It sounds very optimistic. I would love to have you guys back on the show leading up to the next stages for Minterest growth. And I really appreciate your time today. So thank you so much.
Thank you so much, Ashton. It's been a pleasure. Appreciate you bringing me onto the show. Looking forward to the next one as well.